Your tax residency is something that you can design. Where is your wealth? Where is your properties? However, there is a way that you can get out, which is if you have a permanent place of abode. However, there is an interaction with international law, which you may not need to pay tax in Australia. Hey everyone, welcome back to the channel. My goal in this video is to save you a couple of $1,000s in tax advice. So let me tell you about one of my meetings with a client. Most of his wealth, however, is still in Australia. So he doesn't want to break that connection because once you are exit being an Australian tax resident, it triggers massive income tax consequences. Also, it will increase the state taxes. So yes, what I'm saying is your tax residency is something that you can design. And it is super relevant if you are earning income and have ties to Australia, you are planning to move here, or you are planning to move overseas. If you are an international student, digital nomads, remote worker or expat, you must understand tax residency. Why? Because if you are a resident, you are taxed on your worldwide income. Versus if you are a foreign tax resident, the Australian government can only tax your Australian source income. And your tax residency isn't based on your location, visa or citizenship. Don't think that you just move to another country and that's it. You have nothing to do with Australia. It doesn't work like that. It's a totally separate concept. It is a weighting of facts. Here are the 4 tests of residency. And you have to fail all 4 tests if you want to be a foreign resident, and you only need to meet one of the tests to be a resident. So the first one is the most important one, the residence test. Second one is domicile test. Third one is a 183-day test. And the last one is superannuation test. So for the residence test, it's ordinary meaning. If you live here, you work here, you send your kids to school here in Australia, your social life is here, you definitely meet the test. You are an Australian tax resident. However, if you left Australia, you are living in another country, then the test is look at your life overall. Which country you have a stronger ties with. They will look at your employment, maybe if you are moving there for employment. Your family ties, are you uplift your whole family into another country? Your living arrangement, do you still have golf membership in Australia? You still have insurance, health insurance in Australia? Where is your wealth? Where is your properties? Where's your assets? If you still live all of it in Australia, the ATO have very strong argument that you have much more stronger ties in Australia. You would definitely want to return here. Do you have a permanent living arrangement in another country? Do you get involved with the neighbor? Do you go to their kid's birthday party, for example? So that's how it works. You have to paint a picture. If you want to design your residency in a certain country, you have to paint a picture that your life is basically in that country. Otherwise, from the ATO perspective, they always want to argue you are an Australian tax resident because they want to tax you on everything, right? However, what is beneficial for you is depending on your specific circumstances. So that is the residence test. The second way is domicile test. So if you are born an Australian citizen, your parents are Australian, then definitely you pass the domicile test. Another way is if you acquire the Australian citizenship, then you are also an Australian tax resident under the domicile test. However, there is a way that you can get out, which is if you have a permanent place of abode, which means you have a permanent property or a place where you live overseas and you don't intend to go back to Australia anymore. So that is how you exit the domicile test. The third one is 183 days. As the name suggests, if you live in Australia for 183 days or more, you are an Australian tax resident, unless you have a usual home. I know these concepts are very, very muddy, but as it is an analysis of facts, it won't be clear. It's just a weighting of what is heavier. So if you want to exit a 180-day test, so if you live in Australia for 183 days or more, but you have a usual home somewhere else, then you are also not an Australian tax resident. And the last one is superannuation test. This one is very rare to apply. It's only applied to government employees where they enter into the government superannuation scheme. So normally most of the time I haven't seen this apply in real life at all. So there you go. If you want to exit the Australian tax residency, there's a lot of work to do. You need to plan your life that you don't want to have anything to do with Australia and otherwise. So first one is if you live in another country, you want to exit Australian tax, bring your family with you, sell your Australian properties or sell something, right? Bring your pet with you, tell the institution, tell the bank, tell your insurance, tell the Medicare that you are now a non-resident, tell your electoral committee that you are no longer an Australian resident. There you go. There's a lot of work to exit, but be consistent. If you are non-consistent with your behavior, it's very hard to argue your case. And this is only the Australian side. If you meet one of the tests, you are an Australian tax resident for local law. However, there is an interaction with international law, which you may not need to pay tax in Australia. However, it's the conversation for next time. If you find this video helpful, hit the like button and subscribe. Thank you for listening. See you next time.